All right, hello everybody. This is lesson 3. Um, you should have done lesson 1 first. That kind of wrapped up some things from the last unit. Lesson 2 was the test. Now we're on lesson 3. So this is going to our next chapter, financing the government. Just so you guys know, I uploaded the book page numbers in case you don't have your book. That's on this post. For 12.3, it's page 580 to, let's see here, 580 to 588. But we're just going to lecture on it, so that's why you're watching this. Hopefully you printed off the guided notes you're going to need for this chapter. We'll kind of walk you through it. You will need to complete, a few different things. So let's see here. All right, let's start presenting. All right, cool. Let it load. All right. So financing the government. 12.3. So how does the government get their money, essentially? Why do we finance it? All right. So the power to tax. Obviously, this is very important. Think back to what we talked about, like even this year, last year in U.S., 8th grade. The first government that we had, the Articles of Confederation. The big problem that the first government had was that it didn't have the power to tax. And obviously, as we saw, there were a lot of problems with that on how to pay for our national army, how do you pay back France, how do you pay back your debts. So the first government was basically going bankrupt. States weren't holding their fair share of the bargain. So therefore, when the new constitution was passed, Federalists and Anti-Federalists given more power to the federal government. One of those powers was the taxing power. All right, so a couple things. The federal fiscal year runs from October 1st to September 30th. So that's where, from those dates, that's what the fiscal year is, from beginning of October through the end of September. So roughly, government spends approximately $3 trillion a year on a variety of different things that we'll get to in a little bit. So therefore, $3 trillion a year, you need to collect that revenue. You need to collect that tax. So obviously that number has gone up over the years as we start getting into more government programs that need to be created. So where does the federal government get their power to tax? It's stated in Article 1 of the Constitution. Remember, Article 1 is the legislative powers. Grants Congress the power to tax. This is the first power listed. Again, go back to what I said before with the articles. They didn't have the power to tax. That was the biggest complaint amongst the founding fathers and the first government. So therefore, the first power that Congress gets the power to tax. That's one of the most important. You need to be able to finance your programs, pay off your debts, raise money. So feds tax to raise money and to regulate or discourage an activity. We'll get into some of that in a little bit. But ultimately, when you tax, the federal government have to obey the Constitution and the Bill of Rights. So, for instance, federal government can't tax a church services. Why? Because that's a violation of the First Amendment of assemble, religion, speech, etc. So there are some regulations in terms of what they can and can't tax. You have smoking. There's a tax on smoking. The state of Ohio, to try to discourage the activity, increase on that. Alcoholic beverages, you name it. There's taxes associated with that. So license to sell certain things, so cigarettes, gas. So again, those are extra taxes that need to be paid. So think of like almost like licensing. When you license something, you own a business. It's kind of a form of taxation. So kind of keep that in mind as we go forward. All right, so the Supreme Court has upheld taxing for non-revenue purposes. So, for instance, Visa Bank versus Fano in 1869. Now, what the federal government was trying to do, you have private banks that were they were making their own money, basically, and you had different types of monies in circulations. So the federal government, Supreme Court upheld the taxes when they started taxing these banks because ultimately their goal was to go to one national currency, hence the greenback, the money, paper money. So the Supreme Court ruled in favor of the government for that reason, to try to discourage the private banks from making their own money, having different notes in circulation to go to all one common currency. We'll skip this for time being, but Supreme Court has ruled a tax unlawful if it finds that the tax was imposed for improper reasons or violates a person's constitutional rights. So this is most deal with gambling. It violated the gamblers' rights, this tax on them. All right, so anyway, so there's 4 limits to power to tax. So taxing for public purposes. So that's one of the arguments for what you can be taxed for. So roads, public buildings, etc. That's what taxes can be used for. You cannot tax on exported goods. So a business here in the United States that wants to export to another country, you can't tax on that. That's going to hurt American business. Direct taxes must be the same rate in every state. So if you, again, have national income tax or whatever the case might be, a direct tax from the federal government, it has to be the same rate. You can't do one state one thing and another state another. And then the 4th thing, I know it's not labeled 4th, but this 4th thing is feds can't tax the states or local governments when exercising their functions. Oops, let me get off that. You can see the bottom. So again, McCullough versus Maryland. So feds can't tax the states or local governments when these states or local governments are exercising their functions. All right, so those are the 4 limits the federal government has to kind of obey by in terms of the constitutional protections. All right, so federal taxes a day. So the income tax, the 16th Amendment. So again, amendments is a big part of the state test. Who knows what's going to happen with that? But 16th Amendment gives Congress the power to tax your income. So when you guys get your first job, you'll be getting taxed income taxes off that, state, local, federal. That's federal tax and income. This is the largest source of federal revenue that they get is from your income. Again, some countries are bigger, like Canada, for instance, a socialist country, like more of a socialism type of national health care. Income taxes are a lot bigger in Canada than there are in the United States. I think the United States is about 28, 30% rule of thumb in terms of taxes. There it's like 40, 45%. A progressive tax, the more you make, the more you pay. So like how we have it in the United States is that there's tiers. If you make $20,000, $30,000, you're taxed at a lower rate. If you make $500,000, you're taxed at a little higher rate. So that's typically how that works. The more money you make, the more taxes you make, or you have to pay. So there's 2 types of income taxes. There's individual income tax and there's corporate income tax. So there's a difference. We'll get into corporate income tax right here. All right, so corporate income tax, each corporation must pay a tax on its net income, earnings above the cost of doing business. Nonprofit organizations are exempt from taxes, so churches and schools don't have to pay any taxes. So corporations, this is where it can kind of get a little murky, like at Amazon, Walmart. Those are big job creators. So sometimes they can negotiate.
Ladies and gents,
we got a meeting in a minute.
I'll let you know when we are commencing the meeting, so just hang tight. However, we do have donuts down here.
Each corporation.
Donut, come on down and get one in the APR. Otherwise, we'll see you in a little bit. Thanks.
All right, so like Amazon, for instance, they make deals with states in terms of getting an exemption or getting a lower rate on their taxes. So because they create thousands of jobs. So sometimes states are competing for these companies to come there. So they'll offer them deals. So this is where it gets a little bit murky. But there is a corporate income tax. And then there's an individual income tax. This is the largest source of federal income. $1.4 trillion is from like our individual income taxes. So this is what a tax is levied on a person's taxable income. So tax terms you should know. So it's W-4 and W-2. So when you guys get your first job, you'll have to fill out W-4, W-2. We'll get into that. I'll show you guys an example of it in a little bit. And there's other 1040s, different types of 1040 programs, 1099s, etc. So most of us will deal with the W-4 and W-2. 1040s and 1099s are a little bit different. We'll get into that here in a little bit. Now everybody uses a 1040 tax return form, as we'll get into. So Trump tax law is very similar to Reagan, the trickle-down effect. You lower taxes for the wealthy, hoping that they spend to create more jobs. He re-bracketed the tax income, so what each person pays. So kind of just don't worry about that. So here's some of the tax forms. W-4. you fill this out when you start a job, you get married, make more money, change a job, have kids. So this is like what you're withholding. So like if you have kids, your spouse, like who are you claiming on your W-4? So there's child tax credits. So this is like for me when I got my job here, had kids. I had to fill one of these things out to let the government know, who am I claiming? Am I doing it for myself? Am I doing, or me, my spouse? Are we jointly taxing together? We get the child tax credit. So this is what you all need to fill out when you get your job. What are you claiming? So W-2 comes from your employer. So every year, January, February, we get a thing I get one from Midview Schools. Shows your income withholdings from the previous year. This is kind of what it looks like, or something similar to that. This will all be filled in by your employer. So when you get your taxes done, you can just fill it right in. Other types of taxes, there's something called an excise tax laid on the manufacture, sale, or consumption of goods and services. So they call this also the sin tax. This is actually what our stadiums, Cleveland Brown Stadium, the Q, Progressive Field, the upkeep of that is paid through sin tax, state. So like alcohol, casino, tobacco, all those taxes go into a fund for the sin tax, and those pay for the upkeep of our stadiums. It's got the hidden tax, gas, tires, airline tickets, phones. There's Mr. Carmel. All right. So anyway, that is it for this lecture. So just know taxes, the different types of taxes, and income tax being the largest revenue. So that's basically the main majority of the chapter that 11.3 was on, was why did we tax, and that kind of thing. All right. So anyway, let me know if you have any questions, and yeah, see you later.